from CIMH. Thanks again for joining us for the Small County Fiscal TA webinar with Mike Geiss. Just a few things as usual. You're all muted, but we'll be pausing for questions on a regular basis. So if you have a question, type it into the question box or click the hand icon by your name, and I can take you off mute so that you can ask your question. I sent out the PowerPoint this morning. If you didn't get it, send me an email or something in the question chat box, and I'll try and get it to you. There also will be an additional document that we'll send you at the end of the webinar. And as usual, we're recording this webinar, and we'll post it on the website as soon as we can, and I'll send you a link to the recording when it's available. So other than that, let's turn it over to Mike again.
Great. Good afternoon. What we're going to cover today is what was discussed at last Thursday, April 3rd's Financial Services Committee meeting, and it's the usual group of topics. So diving right in with the MHSA update, as hopefully you're aware, the fiscal year 11-12 revenue and expenditure report for MHSA is being revised, and the state indicated they are ready to release that hopefully this week, but for sure within the next couple of weeks. And really all this does is change the unspent funds worksheet, and a couple of things that it does on there is it eliminates the reversion calculation, so you shouldn't see anything related to reversion. It will just list everything as unspent. It also has the ability, or you'll have the ability for those counties that put PEI funds into the prudent reserve to go ahead and show that on the form. The state has said they aren't changing their policy, but they really want to get these revenue and expenditure reports in, so they are going to open that up so you can at least report the PEI funds if you did dedicate those to the prudent reserve. The component worksheets are not changing, so it is just the unspent funds worksheet. And counties that have already submitted the 11-12 with the current format do not need to resubmit unless you want to. And if you do resubmit, you're going to have to then get your auditor controller to sign the new version that you submit, but you're not required to resubmit if you've already submitted. They said 2 to 3 weeks, or maybe it'll be 30 days to complete once they actually issue the information notice. So keep an eye out for that. And it, like I said, the component pages aren't changing, so you could be prepared to complete those. And then once it's released, you can go ahead and just hopefully get it done fairly quickly. In terms of the 12-13 template, they did say that they're going to release that in May, and we'll have a chance to review that. CMHDA will have a chance to review that before it is released. I think the component pages will be very similar, and then the unspent funds page, I think what we'll see is the addition of the ability to make adjustments to your prior year unspent funds amounts due to audits or any other revenues. So, but we still have to wait and see on that. And so that'll be the 12-13 RER that will be out, they're saying, in May. Then the other thing, hopefully, again, you guys are all aware that the MHSA annual adjustment that the state is required to calculate and inform the legislature in March, they came out with that letter, and it ended up being $206.8 million more than estimated back in January in the governor's budget. So this is one of the distribution or the attachments that we sent out. So it's coming in at 479, almost 480 million. rather than the they originally had estimated 273 million. So obviously very good news. That amount, again, it's calculated, it's known, and it will be deposited into the State Mental Health Services Fund sometime, usually it's July 1st or 2nd or 3rd, but sometime that first part of July. And then counties, you folks will see that as part of your August 2014 distribution, which you receive by August 15th. And so, again, good news that it is so high. And you'll see, as a result of that, a fairly hefty August distribution. They'll net out all the reserved funds for administration. They reserve the entire amount of the 5% administration out of the first payment. But after that, it will be a fairly good distribution in August. This then prompted the issue that given the current revenue estimates, there may actually be what we find as growth above our highest funded fiscal year. Currently, our highest funded fiscal year is fiscal year 12-13. And so the estimates now, given this known annual adjustment and given the anticipated personal income tax payments or cash transfers, would give us a little bit more revenue than in 12-13. And so the state has said they want to convene a stakeholder work group to discuss the distribution formula. They indicated that's going to begin in late April, with the goal of having a methodology in place through an information notice that they would provide by June, so that we knew what approach they were following prior to the start of the fiscal year. And we talked a lot more about that, and I'm going to talk about it more in the county-to-county part. But as far as when DHCS was there, this is what we discussed. Anybody have any questions on that stuff? All right. We then talked briefly about the new billing feasibility system study. And again, CMHDA has identified both short-term and long-term strategies, with the main focus right now on some of the short-term strategies, both from a system standpoint in terms of basically things that changes that need to go into the short doyle system in order to keep it running. I guess there is a survey that is going to be circulated, I believe, by the SWAT group for CMHDA. And then we've begun discussion of some of the fiscal process restructuring with DHCS, and we provided a draft document and received some comments back, and we'll probably be discussing that further this month, with the goal eventually of looking and piloting the new approach and taking a look at what the impacts are to counties as part of potentially moving to a new reimbursement system. Cal Mesa is managing the process, and Sarah specifically, and there's her email if you have any questions or need additional information. She indicated that they're going to host a call on April 14th from 3 to 4 p.m. If you have any questions, so you would want to listen in on that. They're also responsible for invoicing the counties for the share of funding, and they're also assisting with the procurement. But again, if you have any questions on or need additional support to try to get this through your county, then Sarah would be the one to contact. Any questions on any of that? All right, then we moved into the Short Dole 2 update, and we were informed that the Master Medi-Cal Aid Code chart had been updated on March 18th, and there's a link there that will bring up the document for you. And it has all the Affordable Care Act aid codes, and I'm not sure what other aid codes, if any, they added, but you can take a look at that document and make sure that your system is consistent with the updated master aid code chart. The state also indicated they are posting the claims payment timeliness report, which they've been doing for a while now, and that generally over the last 6 months, claims have been paid within 30 to 35 days. So they're trying to hit their 30-day target, and they're close. We talked a little bit about the Medicare Advantage plan claiming, and again, remember, this is where if service is not covered by a Medicare Advantage plan, you can get a letter from that Medicare Advantage plan indicating that, and then DHCS will not require a denial from Medicare in order to pay the claim, and so you can just bill directly to Medi-Cal for those claims. To date, they said they have received 8 letters, of which 1 letter has been fully processed. That apparently is posted on ITWS, and then the Med CCC staff will notify the county once it's been fully processed, so that you can begin to submit claims. The one thing that CMHDA brought up is that we would hope that there would be a similar process for drug Medi-Cal services, and I believe CMHDA has requested that DHCS address that, and we're still waiting for a response from DHCS. And then we talked a little bit about the KDA implementation. DHCS continues to post reports on their website that shows the amount of approved claims by county. DHCS is also in the process of developing an information notice on a specific KDA demonstration project indicator, DPI, for the KDA services. And this is something that SWAT has been working with DHCS on these additional indicators for the KDA services. The DPI, once this information notice comes out, DHCS has indicated they will require the DPI for KDA services. But what that means is that if you want to get credit for the service being a KDA service, you need to have the indicator on it. Not that the claim won't get approved or adjudicated if you don't. You just wouldn't get credit as a KDA service per se. You would still get credit as a Medi-Cal service. And really where this comes into play is that it will allow you to start to show all the services and costs that are associated with the KDA services, more than just the ICC and IHBS services. It would be everything associated with the class members. But again, more to come on that once the state puts together an info notice. Anybody have any questions or comments on any of that? All right, moving to the claims payment update. The fiscal year 9/10 cost report settlement, the state's received 46 reconciled cost reports and has distributed letters. I believe they had already sent 30 letters as of the meeting, and they were going to distribute the other 16 within the next week. So hopefully if you're one of those 46, you will have received your reconciliation letter. And then they intend to, as the remaining counties submit or finalize their cost reports, they will process those as they come in. And then they said they anticipate DHCS accounting distributing invoices to counties that owe funds back to the state, and likewise to distribute payments to counties that are owed through the reconciliation process. And it sounded like that was going to happen this month, that at least if you are owed, you'd probably see the invoice this month, and if you are paid, at least the process to get you paid would start this month. And then we talked a little bit about the 1011 cost report settlement. If you have a clean 1011 cost report, DHCS is looking to lock those down so that they can start preparing for the reconciliation process. They anticipate issuing the letters this month. You'll have 90 days to go and update some of the data in the cost report, primarily your Medi-Cal units of service, any offsetting revenues, and then, yeah, those are the two main things. But also any of the payments to contractors too on the MH 1963, you should also be able to update if you've done a subsequent settlement with a contractor since the initial submission. So again, you've got 90 days to do the reconciliation and get back to DHCS. And then DHCS says they require about 30 days to process the reconciled cost report. And then they anticipate another 30 or so days to either get an invoice out or get a payment out to the county. And then we talked a little bit about the electronic funds transfer. And this is where the state's moving to an EFT process, and it's voluntary if you want to participate or not. And they anticipate the instructions in the forms for enrolling should be posted on ITWS by mid-April. They thought the initial process to verify enrollment will take approximately 90 days because it had to go through the state controller's office. But after they've probably done the verification process with a handful of counties, that they thought that would be reduced to maybe 30 days. The EFTs are apparently going to incorporate offsets, but it sounds like the whole offset process, they're looking at providing more detail. Actually, whether you enroll in the EFT process or not, it sounded like they're trying to provide more detail on the offsets to help you be able to reconcile the offsets against your payments. So that was the EFT. Anybody have any questions on any of that? All right, moving into really it was just a state budget update. The 12-13 mental health realignment growth, there's $10.7 million still to be allocated. And in fact, I looked right before the meeting at the State Controller's Office website, and they did post what they anticipate distributing to the counties tomorrow. So hopefully you'll see the check pretty soon. We'll send this out after the meeting, so you don't need to go and look at the link here, but we'll send the actual document out that you can see here in terms of how much you should be receiving. So you're going to want to look for that. And again, this is growth in your 1991 mental health realignment for 12-13. So that's good news that they're getting that out, and they did go with the CSAC recommended approach, which is using the current allocation percentages for that. We then talked a little bit about the 12-13 behavioral health subaccount growth we've been talking about for a while. There's $27.8 million that's available. CSAC provided a recommendation to the state that basically consisted of two different parts. One was 8.6 million, or about 8 million, would be distributed based on the netting of EPSDT folks who basically did not receive sufficient EPSDT funding, netted against the underspending of drug Medi-Cal. And then that would leave about 20 million remaining, and for that 20 million, the recommendation was just to use the 13-14 behavioral health subaccount percentages, and that was the official recommendation. And again, I'm going to talk more about some of the other issues when I get to the county-to-county discussion section. But at least under this approach, the majority of funds would go to every county because the 20 million, but it was the netting process thing that was really kind of wasn't ideal. And then, we're still waiting for the 1314 information notice on how the percentages that are being used currently were determined. And it sounds like DHCS, and they've been saying this for 3 to 4 months now, that this info notice has been in process and should hopefully be posted soon once it's gone through all of its review. All right, anybody have any questions on any of that? And again, I'm going to talk about some of this in more detail in the county to county section. All right, then we had some good news under the work group updates. So DHCS, in terms of the fiscal state plan amendment, they do agree that the county should not be subject to the lower of cost or customary charges. So for county operated providers, including the UCs, you should not have to compare cost to charges as is done on the cost report. And so they need to incorporate that change into the state plan amendment. And we would anticipate that this would be incorporated into the whole supplemental claim process since it would be effective at the same time. So DHS is going to draft some language, review that language with CMHDA, and once that's finalized, then they'll review it with CMS and submit an official state plan amendment to CMS hopefully by the end of this month. CMS has 90 days for review, but the state is hoping that because they've been working so closely with CMS all along, that CMS will not take the full 90 days and will hopefully be a shorter process for them to review and approve. And again, remember, this is retroactive back to January 1st, 2009, which would include that the lower cost or customary charge comparison or the elimination of such would be retroactive back to January 1st, 2009, because that is what would be in the state plan at that point. Once they get the state plan amendment approved by CMS, they anticipate releasing the supplemental claim forms, and then they anticipate about 60 days to process those claim forms. So probably not likely to get, definitely not to get the cash this fiscal year. You may have the ability, hopefully have the ability to submit the claim at least for the second half of 8-9, 9-10, and maybe even 10-11 by the end of this fiscal year, with then the cash coming in the next fiscal year. And then the state also has to do quite a few other things with this. Involve updating the regulations to be consistent with the state plan, as well as some of the information notices that will need to be updated. So they've got quite a bit of work still to come on that. And then once the SPA also is approved, then the state can finalize the CPE protocol and also how the upper payment limit is determined. Does anybody have any questions on any of that? All right. Then we got into the county-to-county issues. Starting off with the coverage expansion, and there's really two parts to the coverage expansion. The first is that the state is going to pursue an 1115 demonstration waiver for drug Medi-Cal, and they're going through the formal stakeholder process as part of that. CMHDA is working with the state on the terms and conditions of the waiver. And one thing about an 1115 waiver versus a 1915B waiver, which is what specialty mental health is under, is an 1115 waiver is typically voluntary, and it's a demonstration waiver, so it doesn't have to be statewide. It's also not permanent, so it gives us a lot more flexibility. Part of the reason for doing this is I think we're all a little concerned about the impact of the Affordable Care Act and some of those changes, and whether we're going to have the ability to go through the Prop 30 process or submit basically a Prop 30 claim on for state general funds over and above what was in existence previously. And so part of this is being able to negotiate with the state around who's going to pay for what and what really should the state's share be, and how much the county should be responsible for through the behavioral health sub-account. Another part of this that we'll probably take a look at is whether it's most beneficial to go for an intergovernmental transfer sort of approach, where counties provide their share of the funding to the state to draw down the full payment of FFP and the match, or to do the CPE process through through the short doyle system as we do now. And really, we're probably going to see two separate sets of rates. Those for folks that are under the 1115 and decide to participate in the 1115 waiver versus those that aren't. So anyway, a lot more to come on that, and I think the state's trying to move pretty quick. So we'll see how that goes. The other part of coverage expansion is just how counties are working with the health plans. And one thing that has come up with that is what are the role of the FQHCs as part of that, and what should the payment structure be. It was brought up that some of the health plans are using different algorithms to determine whether the service is their responsibility or the county's, and a lot of these are outdated. And really the regs are such that there is no obligation for a health plan to reimburse an FQHC for especially mental health services. So it unlike other services where the health plan pays the FQHC, in this particular case for especially mental health, it is not the responsibility of the health plans to pay for that. We talked real briefly about KDA, and I kind of covered this before. The main reason for showing a lot of this has to do with Prop 30. And so you're going to want to identify all costs associated with providing the KDA services, so that as a whole, we can go back to the state and say, we've got a Prop 30 obligation. CMHDA submitted a letter to I believe to the state, indicating that is our interpretation, and so we're hoping to see some state general fund associated with the KDA services in the final budget act, and the hearings are, I believe, going on now in April. So we'll have to wait and see kind of what comes out of that, but hopefully we'll see state general fund and we won't have to pursue a Prop 30 claim approach, but if we do, it'll be the data that we can identify as KDA through those DPI indicators that would be used to support our position. We talked a little bit about the inpatient reconciliation. Remember, this is for the managed care offsets, and really what the state has kind of said is that it doesn't sound like they're going to support or provide any sort of tool to be able to read the 134 files. It's more up to the counties to do that. For those of you that don't have access to the 134 files, you're going to want to go to that website that's listed there and enroll in the as a Medi-Cal provider, so that you can access those 134 files for your county. And what those 134 files should show is the services that are approved through the fee-for-service Medi-Cal inpatient program, and hopefully reconcile with the treatment authorization requests that you're approving at your county. So, and then the 134 file should also tie back to your managed care offset that's posted against your 1991 realignment. So again, and then what we talked about at CMHDA is that maybe either CIMH or a county can devote a little bit of resources to develop some sort of application that would allow folks to be able to read, to parse out the data in the file, to understand what it is, so that you can reconcile your managed care offsets. We talked a little bit about the PUF cost reporting, and where this came up is that I believe there are some PUFs, primarily the contractor PUFs, that may not be excluding the room and board on their cost report, because what you can only claim to Medi-Cal for PUFs are just the treatment costs, and not room and board. And Butte County talked about how the auditors there have really taken a hard look at what is considered room and board, and really forced the county to pull out room and board versus treatment costs. And so there was a subsequent email that Butte County had sent that was forwarded to everybody that kind of goes through what the state auditors are looking at in terms of defining room and board versus defining treatment. But it's definitely something you want to be aware of as you get cost reports from contract provider PUFs. And then we spent a long time talking about the MHSA distribution formula, as well as revenues. And part of where this is coming from is that we're anticipating, or at least based on the projections, which this is posted on CMHDA's website under Financial Services Committee handouts. But the 14-15 revenue is anticipated to be pretty significant, and so we anticipate that at this point there will be distributions over and above the highest year in which we were funded, which was fiscal year 12-13. You then can see here in terms of the revenues that it's really this annual adjustment that we already know for 14-15 that's really causing the large spike in revenues. We then are dropping that back down to kind of more levels like we saw in some of the prior years, which is why you see a decrease in revenues. And then for those of you that looked at the estimated component funding, saw a decrease in component funding. So that is the main reason why. So those are the revenues, but we needed to be prepared for the situation where we do have potential growth above the highest year, and providing some principles to the state on how we believe that should be distributed. And really, probably the main critical factor that we agree with, or that we're wanting to push, is that whatever that highest year is becomes your base, so that you would never receive less than, if there's growth above that, you're going to at least get that amount. There's some concern that the state may look to redo the entire calculation and come up with different percentages, where some counties could potentially receive less funding even in a year of growth. And so we would obviously oppose that. And so this is ultimately what was voted on by Financial Services Committee, and will be taken to the governing board as the recommendation. And it's not that different than what the state had done previously. Population is basically a 50% weighting. Poverty population is a 30% weighting. This is one area that was changed because it used to be a combination of poverty population as well as the uninsured, but we felt that with ACA, we don't need the uninsured on here anymore, as well as trying to get an estimate of the uninsured after the ACA by county probably isn't going to be available. Then also the population most likely to access services, which is prevalence, which is a study that was done back in 2000, and it factors in different demographic characteristics for the prevalence of mental illness. And then just some minor adjustments, which was the cost of being self-sufficient, or kind of a cost of living adjustment between the different areas. And then also taking a look at non-MHSA resources, excluding FFP. And both of those adjustments were really minor tweaks to the formula, which is really driven by population. So this is going forward to the governing board. And then the last thing, well, and actually, yeah, the other thing, just to give you a kind of a heads up, it is anticipated that for 14-15 that the revenues or the distributions would be about 2% more than they were in 12-13. So the way that this would work, if CMHDA's recommendation goes forward, would be that the 98% would be driven off of the existing percentages, and then only 2% of the revenues, if the last 2%, so probably part of the July distribution, would be based on updated figures. And part of where that's coming from too is that the state DHCS was criticized by the Bureau of State Audits as part of that review that was done, I believe, about a year ago, that they didn't have the most recent data, that the data was really old. And so this kind of gives them a way to update some of the data. What's also interesting, though, is that we anticipate 14-15 maybe having a little bit of growth, but then after that, like I said, because of these annual adjustments not anticipated to be as high as the one that basically came from tax year 2012, we don't think that there will be growth after that. So it may just be a one-year sort of thing. And then finally, we talked about the behavioral health sub-account. Again, this whole growth thing where the $8 million is EPSDT netted against unspent drug Medi-Cal. And what they're doing to figure out the EPSDT need or underfunded amount is they're looking at 12-13 approved claims through December 2013, and then applying all the original EPSDT baselines that we got rid of in 11-12. So they went back to your 94-95 baseline and your 01-02 baseline, and they're applying that on a county-by-county basis to figure out, and then comparing that to how much is anticipated to be distributed through the behavioral health sub-account for EPSDT. Well, actually, how much was in 12-13, and then they're saying, here's how much you were either over or underfunded. Then they're looking at how much had been funded in 12-13 for drug Medi-Cal versus how much were the actual claims. When they net all that out, they say there's about $8 million that would get distributed to a handful of counties. And then what CMHDA or CSAC has recommended is for the other $20 million, just go ahead and use the 13-14 percentages. And that way everybody gets some share of the 12-13 growth in the behavioral health sub-account. What we also don't want to have happen is that the state continue to try to do some sort of process like this going forward, because it's somewhat unruly. We definitely do not believe that the state's approved claims data represents the appropriate approach for figuring out EPSDT. And then again, going back to the original baselines where you have different counties with different county shares also is not consistent with a federal entitlement program. And so hopefully this will be the only year they do it. And really where we've kind of come at it from CMHDA is we definitely want to have a stable base so that you can go ahead and budget and have a pretty good idea that you're at least going to get your base. Anyway, versus kind of moving around some of the money based on netting EPSDT against Drug Medi-Cal. And originally the state was proposing to actually redo the entire percentage calculation for the current year, and obviously to try to do that with only halfway through the year would have caused some serious problems for folks who might have had their amount of funding reduced. And so again, hopefully the state doesn't try to pursue this going forward, but there definitely will be probably some interesting conversations around what the 14-15 base is going to look like. And that was pretty much it. Anybody have any questions on any of this stuff?
There's a question. When can we anticipate the distributions to go out to the counties for the behavioral health subaccount and realignment growth?
So the 1991 realignment here says that they're going to issue the payment tomorrow. So we'll email you out this this chart, and you guys can all take a look at how much you should anticipate receiving. Again, if they issue it tomorrow, I would hope within a week you should see that amount, that check, that warrant. And I'm not sure what the warrant will say. It'll probably say mental health subaccount growth, which is a little different than maybe what you're used to seeing. But that is your 1991 growth. So make sure it gets in the right account. In terms of this behavioral health subaccount, we didn't even talk about timing. I don't believe. So for the 1213. Again, this was CSAC's recommendation, and that was given to the state at the end of March. But I don't, we don't know if the state will accept the recommendation. I think the state did agree with the netting idea on the EPSDT and Drug Medi-Cal part, but I'm not sure if they agreed with the 20 million that every county gets a little bit based on the 13-14 percentages. Hopefully, yeah, I actually have no idea. I mean, I would say hopefully by the end of this fiscal year, you would see the 12-13 growth for the behavioral health subaccount, but I don't think we can guarantee that. And I don't think the state was willing to say. All right, any other questions? All right. If not, then I guess we're going to finish up a little early here. Okay, we'll call it a day. And like I said, I'm going to email Shoshana that schedule for the 1991 realignment, and so you should have that shortly. And then again, look for the check within a week. And then we'll look forward to talking to you again next month.
Thanks, Mike.
Bye-bye.
Bye.